Then what is the difference between bank and non-bank? As we understand, deposits are also collected by banks, deposits are also collected by non-bank companies which are authorized. The primary differences are that banks can accept demand deposits. What are demand deposits? Today morning you deposit the money, by the same day evening you can withdraw the money. But what is the term deposit? Term deposit is locked for a certain period, starting from 6 months to 5 years. So non-banking companies can only accept term deposit. They cannot take demand deposit. Secondly, the banks are parts of payment and settlement system. Means they can issue checks. Non-bank companies cannot issue checks. As far as bank deposits are concerned, they are insured up to 1 lakh. Suppose a bank fails, then a depositor's money up to 1 lakh is safe because it is insured by DICGC, one of the body constituted by Reserve Bank of India. But the deposit collected by non-banking companies is not carrying any deposit insurance. So it is risky to put your money with non-banking companies. Then what is financial institution? Financial institution is basically giving out certain activities which an entity can carry out to classify as financial institution. Basically the focus is on lending of others activity, insurance activity, cheat activity, hire purchase activities, insurance activity, all these activities are financial institution activity. Then what do we do? In non-banking companies, there is one segment known as non-banking financial companies. The Reserve Bank of India is regulating non-banking financial companies. To operate as NBFC, it is necessary that those companies have to obtain certificate of registration from RBI. Then RBI issues regulations and supervisory directions from time to time to ensure that the depositor's interest is safeguarded, protected. Various powers of Reserve Bank of India are listed here. I am not going to discuss in detail here. Now, there may be entities which are collecting deposit in their individual capacity. These types of activities are prohibited. An individual cannot take deposit from any person, and there is no provision of law which allows them to accept deposit from individual. In fact, it is prohibited. Under Reserve Bank of India Act, no individual can accept deposit from any other person. Only companies which are registered with RBI as non-banking financial companies deposit taking can only accept deposit. Under Companies Act, New Companies Act 2013, there are a lot of restrictions now. Previously, many companies were taking deposit for their own working capital purpose. In deposit taking companies, there are two categories. One is non-banking financial companies which are regulated by RBI. Another are non-banking, non-financial companies. What are non-banking, non-financial companies? These are companies which are registered under Companies Act. They can access public deposit for their own working capital requirement. But there are a lot of restrictions now. Only public companies which are having 100 crores net worth or 500 crores turnover can only accept public deposits. Then too there are requirements that they should be credit rating. They have to also make provision for deposit redemption reserve. They have to also provide for deposit insurance. The penalty has been become very, has been made very stringent. So deposit collection from public by normal companies has also become now very difficult under New Companies Act. Now this is a word which is very loosely used. We say that cheat fraud, cheat fund fraud. Actually, cheat fund fraud is not deposit fraud. Deposit and cheat are both different terminologies. Actually, cheat is something which is regulated under Cheat Fund Act. It's a central act. Now, cheat typically what happens, there's a group of people. Earlier days, there were no banking facilities. So people wanted a channel to, go for saving habits. And they also wanted a channel where they can borrow. So what they used to do, a group of people used to come together. They used to contribute certain fund on an installment basis or a monthly basis. Say for example, 10 people come together, they form a corpus of say 10,000 rupees. Now this 10,000 rupees will become the cheat amount. Now every month 1,000 rupees will be contributed and a draw will be taken out. Whoever name comes, he will get the cheat amount. But he has to keep paying the future installments. He is not escaping from paying the future installment. This is a typically conventional cheat. Then there is another type of cheat which is known as business cheat or auction cheat. In that what happens, the bid will be there. 10 people will be there, corpus will be 10,000 rupees. People will start bidding. Now bidding will be in reverse order. Whoever bids lowest amount will get the amount. But under the act, there is a restriction that the bid amount cannot go below 30% of the cheat amount. Suppose the cheat amount is say 10,000 rupees, the bid cannot go below 7,000 rupees. So 30% discount, something which the law allows. So if somebody is carrying out this kind of activity, you have to ensure that he is having the registration, because this is also a regulated activity. And there is a Register of Cheat, which is the state government authority which regulates the activity of cheat. Then another category of cheat is price cheat, which is a banned activity. Now in price cheat and cheat, the difference is speculation. There is a chance win. In price, what happens, 10 people will come together. Whoever is getting the lottery will get the amount, but he will not be required to pay the future installments. He will escape from paying future installment. Suppose you have any good scheme where people have to contribute amount, and suppose some article is kept like scooter. Now a scooter will be awarded. Say if you collect the amount, an amount will be collected, draw will be taken out, and whoever gets the cheat will get the scooter, others will lose the money. So that is a chance win. That type of activity is banned. That is known as price cheat. Price cheat is not an allowed activity, it is an illegal activity. Then we will go to Ponzi scheme. Ponzi scheme is another name given to the quick money making schemes. Basically this name has come from the person whose name was Charles Ponzi. He was an American. He was promising very huge returns. 50% return in 45 days, 100% return in 90 days. That kind of scheme he was running. So in India also, we call these schemes like multi-level marketing, where you have to form chains, and the only purpose is that in India it is known as money circulation scheme. It's a banned activity, where there are two ingredients. One is that there is a quick money making scheme, and the quick money making depends on enrollment. How many members you bring? I think some of you must have heard that you bring members and you start getting money. That is the only purpose of those kinds of structured schemes. Typically the scheme looks like this. There is a pyramid structure. As long as you are on the top, you are very fortunate, you are very lucky. But when you are at the bottom, the scheme can anytime crash. The basic principle is that as many as when Peters are, this is known as robbing Peter to pay Paul. Means as many Peters are joining, the Paul will start becoming thicker and thicker. So the scheme will operate as long as enrollment is there. The minute the enrollment stops, the scheme will crash. This is also known as multi-level marketing. You must have heard of Amway, where there are schemes. Typically what they do, they are having a scheme where 4,400 rupees you have to pay. Out of that 2,600 will go towards product kit. You will get a product kit. And 1,800 will go towards your subscription fee and product literature. What is required? Below you have to enroll certain members. The schemes are like 1643, 1963. It is like geometric multiplication. And as long as the chain grows, you keep earning money. So that kind of activity is known as multi-level marketing, and it's a banned activity. Now this is a binary scheme, typical structure, where below 1 you have to enroll 2, below every 2 they will keep on multiplying. Speak Asia was a classical example where you have to carry out online survey, pay 11,000 rupees, and only thing what was required is that you have to enroll 2 people below you so that the chain grows. As long as the chain grows, the people will keep getting money. Now what do these companies do? Basically they have very fancy names. They try to tell people that you only sell one product. Once you sell that product, you bring one more member. That member will bring more members, and as long as the members are joining, the people will keep getting money. Product is only a phase. Actually the product literature, if you carefully read, it is basically to form chain. The minute these two ingredients are there, quick money, easy money, dependent on enrollment, it is a banned activity. Now how to identify these schemes? They give very fancy name. They have the enrollment pattern, then by commission pattern, and by advertisement. These are different types of money circulation scheme: product based money circulation scheme, which are nakedly identifiable, where there is no product, but simply consider that returns are dependent upon enrollment. Now who are the vulnerable targets? I have not included students in this because they are not earning. Now another category is collective investment scheme, where the money is pooled and invested into a particular property, say land or tree plantation, and the investor is not having any control over the day-to-day affairs of the entity. So as long as the investments are coming, the money will be distributed to the investors. This was the Sharda scam. Now some of the amounts are mistaken for deposit, but they are not actually deposit. What are they? Share certificates, the regulatory SEBI, unit certificate of mutual funds, again the regulatory SEBI, unit certificate of collective investment scheme, unit linked insurance plans, subscription to cheat, instrument of money circulation scheme, which is banned, advance against goods and services, they are also not deposits, earnest money deposit, dealership deposit, and security deposits are also not deposits. Now, what are economic offences? Basically, there is a wrongful loss and wrongful gain. The only object is to deceive people, make money and vanish. It causes lot of difficulties in the markets. Then in Reserve Bank of India, we have formed state level coordination committee. The basic object is to collect information about unauthorized acceptance of deposit and take action against those kinds of entities so that public is not losing their money. Now depositors can also take action. What are the actions depositors can take? I have described in this slide. Then we have recently launched a website known as Sachet. On Sachet, lot of information has been hosted. This is to sensitize the investors from not losing their money. On the website you will find there is a FAQ, lot of question answers are given, investor awareness is given. Then here help your regulator. Here you can lodge whatever information you are gathering. If you find that somebody is running a scheme who is promising huge returns, somebody is lending at a very low interest rate, or somebody is dwelling into a very risky venture, all this information you can voluntarily provide. You don't have to disclose your name, so that action can be taken at regulatory end. This is basically to share information and no need to disclose your name. The complaint page looks like this. If you are aware of the regulator, if you have been already cheated by some company and you know the regulator, then you can go to the respective regulator and lodge your complaint. Certain details are provided. This is how the complaint page looks. You can also track your complaint. Information will be provided on your mobile number. Then last message for all of you. सोचा था होंगे माला माल, लालच ने किया बुरा हाल. Thank you for your time.
Informative and relevant session. All of you are B school students and most of you might be planning to set up your own ventures after you complete your studies. In this regard, one problem that the entrepreneurs face is information gap regarding the schemes that are being run for entrepreneurs as well as the regulatory infrastructure for that. So I will now invite Shri E.R. Muthuselvan. He is a faculty member at College of Agricultural Banking, Pune, to give you an overview of the regulatory architecture of MSME financing and new products in MSME financing. Shri Muthuselvan.
Regional Director, faculties from IMT Ghaziabad, and my dear students, good evening to all. So basically, the session meeting for about another 10-15 minutes, I'll be telling about the SME finance. I think you all might be aware in the recent times, my colleague said that manufacturing activity has slightly picked up. We have given a lot of thrust for SME finance. Basically, I think Government of India has come out with the Make in India, Stand Up India, Skill India. The basic idea is that I think you are all very fortunate. Maybe after your 2-year post-graduation, all will be placed in MNCs or very big companies. But you will have to think it about in your own neighbors or in your own villages. How many people are getting a very assured job? Because it's not possible to absorb all the our youth force into the formal employment, formal sector. They won't get neither government service nor into the big MNCs. But we have the recent times we are all telling about India's growth, in the sense India's strength is basically we have a very good demographic advantage. Unless the demographic advantage has been channeled into some amount of economic activity, again what's happening in the left wing extreme states or whatever is it, they will not be put into the productive use. So that's a main idea. I think in the recent times government is focusing more into the SME, because whatever we are trying to mention, this youth demographic advantage, all will not be able to get a self-employment or even a wage employment in a very big companies. Yes, but they can do it as very big small companies where they can either start up their own companies or they can join as a wage employment. We are trying to encourage the entire MSME space so that there will be a more and more manufacturing vibrant activity will be there. I'll try to cover slightly on. So what is the extent regulatory architecture? Probably I think you all might be aware, for quite some time I think we were all talking about MSMEs are not the darlings of banks. I think mostly they look into the corporates or even into the industries only. MSMEs are by and large they have been left out from the formal finance. I think many studies says that there are only more than 90% of the SMEs are not having formal financial linkage. hardly 3 or 4% that are having formal financial, remaining all are completely left out. So we'd like to reverse the situation. We'd like to ensure that at least 15% of the SMEs are having a formal financial linkage with the mainstream financial institutions. What Reserve Bank has done, I think we'll try to, I'll mention. Basically, I think your director has said that, like when Reserve Bank says that mostly our ideas are, or whatever our views are, unbiased. To be frankly speaking, our definition of SME is slightly very old, and then it's not a very robust definition. If you look at any definition in the Western nation or even the European Commission central banks, they say that they won't look, our definition says only based upon the plant and machinery, because our MSMEs are very small, and then they don't have a proper balance sheet, they won't have a very robust infrastructure they are not having. So we are following a very small structure, but if you look at in the Western nations, they look at the investment plant and machinery, they look at how many people have been employed in the industry, and they look at what is the annual turnover also. In the same thing, I think India also, we are not all the banks or not other people are not using, only for the government incentives the definition has been used. If you ask somebody in the CRISIL, whomsoever the rating company, they say for them SME is basically the annual turnover. If it is less than 50 crore, they call it SME industry. So the definition what we are using is basically for the government purpose or to get some incentives only. I'll not go much into this one. I think some of the classical committees are there. Basically, we knew that why the banks are not lending to the SME. That's the main reason is that I think you all may be aware of the word something called information asymmetry. When a banker is trying to approach, the sense a borrower is trying to approach a bank, the bank looks at what is your cash flow. Basically, they look at like whatever the money I'm lending it to you, whether you will be able to repay the money back. But for the SME, there is a huge information asymmetry. They were not able to establish, okay, fine, if I give me 10 lakh rupee loan, I'll be able to generate 1 lakh cash flow. That's the biggest issue is there. That's the reason many committees have been put. There are some classical committees say that 20% of the turnover can be easily given as a a term loan or working capital, whatever is required for the enterprise. So we have a classical